Hi everyone, it's Jack back with another video, and today I'm going to be talking about Legal & General Group, a FTSE100 business. It's the second largest institutional investment firm in Europe after BlackRock, and in the top 10 in the world based on assets under management, of which it has over $1 trillion. It does pensions, annuities, lifetime mortgages, asset management. No longer does insurance after it sold its general insurance business. This is a business that right now pays around an 8% dividend yield, which makes it interesting in its own right, but also that its PE ratio is under 7 right now on a trailing basis, and with an 8% dividend yield and the stock doesn't really do anything, that gives it almost bond-like returns in my opinion. Last 5 years, stock is down 9%, obviously up when dividends are included, and in the since 2021, it's basically flat. Had a big drop this year from 52-week highs because of the banking crisis and the effects there and a higher interest rate. But I want to dive into this business, look at the most recent quarter, look how it's performed over the longer term and decide whether I think it's a buy, sell or a hold, because that 8% dividend yield is nothing to sniff at. First, I want to talk about the most recent year's results, and the headlines up for this are pretty good. Operating profit from divisions up 10%, earnings per share up 12%, full year dividend increase of 5%, and the return on equity continues to increase at 20.7%. We're going to get into a bit more in detail, but these headlines, they look pretty good. Going a bit more in depth, these types of results have been pretty much the theme for this business of the last 10 or 11 years. You can see operating profit from divisions has increased in the last 10 years, 9% compound annual growth rate, which is excellent. One dip really, or the only major dip, was in 2020 for obvious reasons. 11% compound annual growth rate for earnings per share, again only dip in 2020 but big rebound. Over the long term, these results smooth out and create a really nice graph, but value per share has increased at 8% compound annual growth rate. And this, in my opinion, is one of the best dividend growth shares in the UK available, particularly on the FTSE100. 11% compound annual growth rate for the dividend over the last 10 years, and it's consistently paid out, not once reducing. One huge upside of being in the investment management and asset management game is that your market opportunity and total addressable market is essentially all the money in the world. You can see the market opportunities they believe that are really going to help the LGEN business, Legal and General Investment Management, globalisation of asset markets, aging demographics, and addressing climate change. Between them, they're over $200 trillion in market opportunity. Now, obviously, Legal and General isn't going to grab that amount of it. The investment management part of this business currently has over $1 trillion assets under management, but this is growing at a nice compound annual growth rate, and as the world economy grows, it's got a huge total addressable market to keep going at. There really is no end to, there's never going to be a cap on the asset management side of this business, in my opinion. BlackRock is kind of the gold standard investment and asset management game, in my opinion, and you can see Legal & General, while significantly smaller from 2011, they're operating at roughly 30% of BlackRock's base. However, they performed admirably. They have a better compound annual growth rate in terms of operating profit, 8% to 6%. Again, BlackRock's numbers are a lot larger, so in absolute terms, BlackRock's are going up more. Earnings per share is increasing at a faster rate, profit after tax is increasing at a faster rate, book value is increasing 60% faster than BlackRock's, and the dividend per share is slightly lower but essentially the same at 11 and 12%. All of this at much higher dividend yield, 8.1% to just 3% for BlackRock, and much lower price earnings valuation. We're looking at a 7 price earnings for Legal & General compared to an almost 20 for BlackRock, and about half price to book. So price to book for BlackRock is almost 3, Legal & General is 1.3. This shows a significant undervaluation to its key peer, and while of course there should be some undervaluation, BlackRock perhaps should be valued higher because of its inherent prestige. It's kind of the gold standard in this industry. Legal & General, in terms of growth, is outperforming in my opinion, and that is not reflected in the valuation whatsoever. Legal & General is a predominantly UK-based business, or as that has certainly been the case over its history. That is one downside compared to BlackRock, which is far more of an international business. But over time, they have increased. International now accounts for 37% of the $1.2 trillion of assets under management. They're working outside of the UK and Europe now, in the US, Asia, and the Gulf. And this has really improved the diversity of this business, in my opinion. It is much less exposed to the UK economy. So things with like the mini budget, this company got hit quite hard, whereas I don't think it's absolutely the case anymore, because this business has increased its diversity to other geographies. It's still got some work to be done. Obviously, international markets in terms of size massively outweigh the UK market, but they're getting there, and I think that's absolutely a positive thing. Not only is Legal & General trading at a significant discount to its peers, like BlackRock as I mentioned earlier, but it's trading at a significant discount to itself in the past versus its 5-year average price earnings ratio, which on a trailing basis is around 9, currently around 6.5. Decent discount in my opinion. The index, being the FTSE 100, trades for around a 12 price earnings. Price of cash flow is less than 1 at the minute, and the 5-year average is still very, very low at 2.5, index 7.3, and price and bulk value, this is typically between 1.5 and 2, currently around 1.17, 5-year average 1.62. These are all show, in my opinion, that Legal & General is significantly below its average valuation and significantly below the valuation of its peers, and its dividend yield is at 8% with a payout ratio of 50% or there or thereabouts. This is really attractive valuation, excellent dividend yield for a stock that never really does anything, and if anything is significantly undervalued at this point in time. So I think I'm going to be adding some Legal & General to my UK dividend portfolio. Seems a pretty easy one for me. It has long-term, essentially bond-like returns, so nothing over the last 5 years. Never really has a lot of movement in the stock, not particularly volatile, other than this year because of factors in the UK economy like the mini budget, which I don't think it is incredibly exposed to anymore, with massive parts of its investment management business, which is the real growth catalyst for this business, is in international. 37% is in international markets, or markets that aren't the UK. Its 52-week low is 191. It's decently above that, but it's still got a lot of room to climb to its 52-week high. I think just with some multiple expansion, getting it back to its 5-year averages, this could be a well over £3 stock in the not too distant future, and that is with currently an 8% dividend yield. Very cheap valuation. I think for me, this is a strong buy right now, and I'm going to start adding it. Maybe it'll go up to 5% of portfolio allocation in my UK dividend portfolio. Of course, none of this is financial advice. You should do your own research and due diligence, but let me know down below what you think about Legal & General stock, whether you think it's a buy, sell or hold. Like and subscribe and join the video. I'll see you again next time.